basically am far more optimistic about the economic scene as a whole than most newspapers, most commentators, and indeed, it seems to be a lot of people in government. And I'll explain why. That we haven't really got to grips with all the debt that is out there. And particularly, what worries people in this country is that around about 2005, 2006, before the bust, I mean, things really got very frothy, and colossal sums were lent to private equity and to infrastructure and so on, and basically on five-year loans, which means they're all coming due in 2011 and 2012. Now, inevitably, what the money was spent on is worth, half. The assets are worth half what the loans are. So when it comes to roll them over, then you can't roll them over because that's when the reality is going to have to be recognised. So there's a lot of pain to come there. Of people are going to have to take their haircuts. They're going to have to. They can't stop lending and pretending, as it were. It's going to come home to roost. It's a question of government cuts. It's as if we didn't have enough problems. The government's going to come along and slash spending allegedly by 25%. This clearly is going to be bad news too. But in spite of all these things, I'm an optimist, and I'll explain why. But the reality is, I think, that you can make quite a positive case for what's happening. So the shortage of bank finance is a huge constraint, be it for mortgages or trade credit or everything else the way through. And to some extent, the squeeze will continue because a lot of banks aren't there anymore. All the Irish ones are out of business, the Icelandic ones. So even if the Lloyds and the Barclays and the World Banks of Scotland increase their lending in the UK economy, there'll still be less money around in the sense that there are fewer, we don't have the competition of foreign things. So they can increase, but there's still less money around. However, when you actually look at where the banks were lending this money up to 2007, 3/4 of it was going into the financial sector. It was going on private equity buyouts and so on. So that, given that all that has disappeared, the actual availability of credit for proper businesses, shall we say, for the real economy, there isn't a constraint. There's an unwillingness by the banks to lend it, but the money is there. The second point on that is that banks recover much faster than you think. Although we still talk of banking constraint, the reality is that by this time next year, finance should be a lot easier than it is now. The recovery there's still things to be dealt with, but the recovery is coming through fast. The Royal Bank of Scotland is about to launch a nearly $5 billion securitisation, a package of loans and mortgages. And that's basically the biggest and first since the crash came. The fact that that is beginning to happen again is another very positive sign that things are getting better. The fact is that as the system as a whole recovers, it becomes easier to deal with. That you can't write off 100% of a loan at once, but if you write off 10% or 15% a year, it's much easier to cope with. And of course, that's what's happening. But as they can afford to, people are taking these hits and getting more realistic about the values of the stuff. And so gradually it is working through. The real issues come down to the cuts and the recovery. That the rhetoric has clearly been extreme, but then you've got to condition the public to get them in the mood, for belt-tightening. The reality is rather different. It takes a long time actually to cut things intelligently, to stop them, you can't just stop the money. The way you can actually cut is by stopping doing things, as opposed to trying to do everything but with less money. And most governments try to do everything with less money. But what they should do is say, we're not going to do this anymore. We are out of health. We're out of education. Which of course it takes a long time to work what they'd be out of, and they never do it. So they try to do the same with less money, which works for a while. Then gradually, of course, it doesn't. You can't keep that amount of pressure on the system for long. So they lose momentum. But the reality is, it's incredibly difficult to do. And so much as this government does want to, I think, particularly get in among the welfare things, the reality is they will find it very difficult. So I would say that we will still get an awful lot more rhetoric on cuts. And there is going to be a squeeze, I mean, the continuous squeeze. So don't go away thinking and popping the champagne corks, because it will be quite tight. But it won't be anything like as brutal as they say it will be, because they'll run out of, A, they can't, and B, they'll lose political impetus. The UK is actually quite good at coming out of recessions. We've had a lot of practice over the years. And if you go back to 1993, the deficit and so on then was the biggest we'd ever had. I mean, we've managed to top it this time. But in the context of the time, it was pretty well as bad as it is now, albeit no banking crisis. And so there was a Lamont budget in April, and then Lamont got fired, and Ken Clarke took over and did another budget in November. So we had two budgets the same year, and tightening the squeeze. And what, essentially, the combination of those two budgets did was what we've done now, complete squeeze on expenditure, you know, absolute no cash limits, no more government spending, and the stuff I just mentioned. 93 was dire, that was the pits. But by 97, when Labour got in, May 97, the whole thing had turned around, because I mean, Labour, Brown and Blair came in on the back of an economy that was booming, and they just sat there and raked it in. So in less than 3.5 years, the entire economy had turned down from being a basket case to, you know, setting the stage for what was another 10 years of growth. And so that's the point, that it can turn around very quickly. And the ingredients were, as I say, this squeeze on spending and a devalued pound. And we've got the same thing now. The reality is that in the 93, after the turnaround in 93, the growth rate for the following 6 years averaged 3.5%. We come out of recession, you grow much faster than trend. And similarly, in 1982, after the 81-82 recession, the growth rate for the following 6 years was 3.7%. And it's the feature of the UK economy that when it does recover, it plays catch-up, if you like, and you get much faster growth. The expectation ought to be that this year will probably pan out at about 3% growth by the time we get through it. And next year, I would have thought, would run up quite easily 3.5% growth, and thereafter for several years. I can see no reason why this time should be different from 93 or 82, or even in the 70s. Again, we go back to the 90s when the housing market itself was moribund. There was a huge amount of loft conversion and extensions and all that sort of stuff. So I think that repairs and maintenance and extensions market will probably, I believe it's picking up a bit, but I would have thought that was actually going to be pretty positive as over the next couple of years, even if the house building side is slow to move. So,